Korea's wealthiest investors just went all in on chips. One single ETF pulled in 431.9 billion won in a matter of weeks. At the same time, oil ETFs are spiking on Middle East risk, and bond ETFs are catching a bid too. It's Wednesday, July 22nd. Here's what investors are watching in Korea today. Samsung Electronics and SK Hynix have led Korea's chip rally this quarter as memory prices recovered. Leveraged single-stock ETFs let investors take an amplified bet on where those two stocks move next. This week, Seoul brokerages flagged a fresh wave of high-net-worth buying, concentrated almost entirely in semiconductor leverage products. Here's what the numbers show. High-net-worth investors with over 1 billion won in assets funneled 431.9 billion won, or $29.3 million, into the Codex SK Hynix Leverage ETF, the single largest leverage buy this month. The Codex Samsung Electronics Leverage ETF drew 136.5 billion won, or $9.3 million in net buying, trailing only the SK Hynix fund. Renewed Hormuz Strait tensions pushed oil ETFs sharply higher this week. Codex WTI Crude Oil Futures Enhanced logged its steepest one-day gain in 20 trading days. Korean government bond ETFs also rallied on the same Middle East uncertainty, with bond prices climbing 13% over the past 7 weeks. So what does this mean for global investors tracking Korea's markets? Earlier, we said one single ETF pulled in 431.9 billion won in a matter of weeks. That concentration means retail money is now riding on Samsung and SK Hynix, moving in lockstep, with no room for a split outcome between the two chip makers. The parallel move into oil and bond ETFs shows the same investors hedging that semiconductor bet against a geopolitical shock. Watch 3 things this week: SK Hynix's next earnings call, Samsung's upcoming print, and whether crude prices hold their current gains. That's today's AI PRISM Securities Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a WAN-IFRA award-winning series. We'll be back tomorrow.